So you have these other stocks that are on your mind, if not a list of ones that you think could be poised for a breakout. You don't own either of these names, but you've called them to our attention and for our viewers too. T. Rowe, and Old Dominion.
Yeah.
Why so?
Well, these are great setups, and one of the things I try to do on the show, even if I'm not involved in the trade, is just put the spotlight on a stock that you may not have heard of, where something notable is happening with price, and then take a look at the fundamentals and try to understand whether or not that trend has the potential to continue. I want to look at a one-year chart of, let's do Old Dominion, Freightline, ODFL. This is one of the largest LTL trucking companies in America. That's less than truckload. So they're shipping for everyone, 50 states, 23,000 employees all over the country. This stock has now broken above its spring highs very convincingly with a big gap up. And over the last couple of days, it's been retesting that gap on lighter than typical volume. You have a 50-day crossover above the 200, which signals a momentum shift in the underlying stock. If this retest is successful and it doesn't get back down into the gap, use candlesticks charts for this, there's no reason why this couldn't continue to roll higher. It's in a group of stocks that have been doing well. It's one of the better performers, and it's about to clear that resistance from 6 or 7 months ago. I think it should be on your radar. And if you're shorter to more intermediate term oriented, this is exactly the type of stock that hasn't been discovered yet, but could be discovered if and when it convincingly takes out that April high. Let's do T. Rowe really quickly. This name, more people know what it is. It's an asset manager. The asset management stocks have been on fire all year. This is actually one of the laggards, but now about to break resistance. T. Rowe Price is not just mutual funds. They've made big investments into private credit, private equity. They're involved in crypto. And this stock is clearing 3 years worth of congestion at these levels. It's probably underowned. It's probably cheaper than the group. And again, it's a pending breakout. You can see this right here. Look at that congestion going back to 22. The buyers are taking control of this chart, and I think you want to have it on your radar.
Yeah.
There are setups like this in every sector. I think your starting point as an investor becomes really important to find them.
All right. You know, another stock in the midst of, I think it's fair to call, you want to call it a mini breakout, Jason, call Amazon, if you want to. It's the best mega cap tech name. Best mega cap tech name. I'm not including Tesla in that. If you want to talk mega cap in general, stocks over $1 trillion in market cap, then Tesla is obviously the best performing one since the election. If you take Tesla out of that mix and you just talk about technology-focused names, Amazon's the best since election day. It's up 6.5%. It's a new record high. I know it's down a little bit today. Weiss, you're in the name too, right?
Yep.
What do you think about this breakout that this stock is in the midst of? As you know, Josh just said, I called it a mini breakout. Josh said bona fide breakout.
Josh had called it before, about a month ago or so, or weeks ago, saying it's going to break out. Look, I think it's kind of interesting. I mean, Amazon has been left behind, so to speak, while all the others have moved up, meaning Meta, meaning Apple, until recently. So it's about time it caught up, but it's also fundamentally driven. If you look at what Jassy has done to the company, he's removed the vanity projects. He's focused on EBITDA, so he's focused on profitability, increasing profitability. Of course, they were already profitable. So it's a name that people just have been sort of ignoring for, and I mean when I say people ignoring, on the margin. You have long-time holders, I'm a long-time holder, and others, but in terms of new money coming into it, it needed to have a story, and the market needed to get comfortable with the story, and that story was Jassy delivering on it.
Jay, I mean, it's up 40% year to date, okay? Yep. Is that being appreciated enough?
You know what? I think it's starting to finally. I mean, it's up 14% since the print. You know, very solid sales and EPS growth. You know, listen, last quarter, it seems like it was 2 years ago, but they had a top-line miss, right? That's way, way, way back in the past at this point. AWS operating margins, profits, to Steve's point, were up 50% year over year. So I think, and the other story is this Amazon Haul new business, you know, for products that are $20 or less, I think that's going to be a nice vertical for the company. So I like a lot of things here.
And I think the other part of it is people are looking for legitimate companies that are going to benefit from AI, but haven't had that dialogue, that narrative about the company going. And that's starting to be realized in Amazon. AI, which they've been using for years, and AI has been around for decades, but when you take a look at what it can do, their cloud business, drive more use in the cloud, and they'll develop their own tools eventually.
Well, that's why they have the
Microsoft
investment in Anthropic, right? So it's been identified. Now maybe they're just starting to get a little more credit for it. To your point, Josh,
so.
Price target today, Needham 250 from 210. So the streak continues to chase a lot of these names higher, but that would be a touch less than 20% upside from here.
Look, I know it went up a lot. I know it went up a lot already. But if you pull the lens back and look at the last 5 years, the stock spent a lot of time doing nothing. Andy Jassy spent his first year kind of cleaning up the excesses of the pandemic era. They hired too many people. They tried to do too many things at once. So that was year one. Year two was just pure defense. And then year three was, oh no, we can't get left behind in AI. Okay, fine. Now we're in a different era. We haven't seen Amazon playing offense, like visibly playing offense, in a long time, and people forget when this thing gets on its horse, what could happen. Just consider the blitz of headlines. In the last 48 hours, they just launched a telehealth business. Amazon is going to come out with a low-cost, upfront pricing clinical visit that you do online. They have the potential to put this in front of more potential users than all of the other publicly traded telehealth companies around the world combined. And they can bundle that with free medication delivery through Prime. If you're already paying for Prime, why and you need prescriptions from their prescription business, why wouldn't you also do your telehealth visits that way for new scripts? Of course you would. They're going to do it better than anyone else. They're going to be dominant. That's Amazon on offense. Number two, the Temu competitor, Amazon Haul. Inexplicably, there's an audience for $5 junk from China, and it seems to be a big one. My son's in that category. I don't know what he's buying or what they're sending. I don't want any more Temu deliveries. Amazon just launched this thing based out of Seattle. They're going to go slow, but ultimately, this could be a brand new vertical, to Jason's point, that nobody was really counting on them playing in, and they're actually going to charge you for deliveries for anything under $25. Last, Trainium 2 chips are Amazon's answer to the conundrum. All of these AI workloads, it's too expensive and too cumbersome for the NVIDIA GPUs. There's got to be something in between that's more customized to the AWS user and that we can make some more money using. So you're going to see a ubiquity of Amazon chips, Trainium 2 chips, in all AWS environments. This is Amazon going on the offense, and that's what the stock's responding to.